Well, good morning, Jeff, and thanks for having me on. Yesterday, we laid out our second quarter results, obviously, but we also laid out three other things. We laid out a new strategy, a new financial framework, and a new investor proposition. And a lot of focus was obviously on the financial framework and on the distribution policy, and within that, what we did with the dividend. I think the changes, Jeff, that we made around the dividend yesterday were very simple, really, and they were rooted really in two things. Number one, it was a decision that was deeply rooted in strategy, and we laid out a strategy yesterday that says we want to transform ourselves into becoming an integrated energy company from IOC to IEC. And the second thing we talked about yesterday is that strategic context has been amplified by the pandemic and the uncertainty that the pandemic has created. So that was really the framework of what we discussed yesterday.
I'm looking for a bit more flesh on the bone here, Bernard, because lots of questions were immediately raised by this pivot. I think the market liked the messaging. That was clear on the share price performance response. But even within the announcement, you yourselves raised some questions about the likely return on capital employed in power projects compared to what you've been able to generate around oil and gas. Why should shareholders continue to be invested in BP if the message is that you're likely to make lower returns from some of these projects going forward than you would by staying in the traditional oil and gas sector?
That's a great question, Jeff. And I think I'd point you to three things around the investor proposition. First and foremost is committed distributions. Yesterday, we reset our dividend at 5.25 cents per share per quarter. That is a resilient dividend intended to be robust at a variety of oil prices. And we committed to buy back shares with 60% of excess free cash. So that is the first thing around committed distributions. The second thing that we pointed out yesterday is that we would have profitable growth. And we believe we can grow this company over the next decade. And we have given some guidance yesterday around EBITDA per share growth and return growth through the next decade. And then thirdly, it's about sustainable value. For investors who want to invest in a company that is in itself decarbonizing and in doing so helping the world to decarbonize, we believe it's a good proposition for them. So we do believe we can generate strong returns. We talked about around 10% from the transition businesses, specifically low carbon. We think we have a lot to add in this space. We bring over 110 years of deep energy experience, steeped in energy markets. And we think, importantly, that by stitching together parts of BP, by integrating parts of BP together to give consumers and customers what they want, we can enhance that return. So we're quite optimistic and quite confident. Clearly, there's a lot of work to do. Words are easy. We have to demonstrate it in delivery, and that's fully what we intend to do over the next decade.
I mean, glibly, I guess there were a lot of investors yesterday that were saying, well, what does Bernard and the team know about solar panels or about building wind farms or about any of those projects that would take you away from your core oil and gas knowledge and deep data bank?
I think this is a very important question, and it's one that we tried to address yesterday. And we have this, what we call a 3x3 strategy, Jeff, and I think there are three areas of focus, which are things like low carbon electricity and energy, consumer and next generation mobility, and our traditional hydrocarbon business. But what we really emphasize, to get to your point, is what we call three sources of differentiation. Three things that we believe that we can uniquely add to those businesses. The first is clearly around integration. The second is around providing solutions for cities and industries. Today, BP in North America provides energy management to over 100 cities, knitting together solar, wind, gas, our trading business, to give a city what it needs, which is clean, reliable, and cheap power. And the third is around embracing digital. So those three things are things that we believe we have relevant and relatively unique experience where we can add to those businesses to make them better than they would otherwise be.
See, the question is, will you buy it or will you build it? You do have cash on hand to get more involved in the renewables space. What's your board level thinking at the moment about how you add those businesses into the portfolio?
Well, I think if you look specifically at renewable power and low carbon electricity and energy, we set out an ambition yesterday to go from 2.5 gigawatt today of generating capacity, which we have in our solar and in our wind business in the United States and in our solar joint venture with Lightsource BP. We set out an ambition to go to 50 gigawatt by 2030, a very large ambition. And what we said is that the capital framework that we laid out yesterday, a capital framework which is between $14 and $16 billion per annum, that contains a mixture of inorganic and organic growth, and that framework delivers on that 50 gigawatt of capacity. Now, the big question is there going to be large-scale M&A? All I would say is that, we would never rule something like that out. It's not needed to get to the outcomes that we presented yesterday. And we've got a lot of work, quite frankly, to do over the next couple of years to build some more track record and to build some scale.
Can I just ask you about the dividend policy from here on in then? It felt like a new normal, that we are not going back to the dividends of old as far as BP is concerned. Just give us a sense of what the boardroom level thinking is on that.
Well, as I said, the decision around the dividend is rooted deeply in strategy. And the strategic intent is to move from being an international oil company to being an integrated energy company providing solutions for customers. And to do that, we need to invest into that transition. And what we want to do, Jeff, is we want to be able to do that at a range of price outcomes. We want to be able to do it constantly and continuously, not following a commodity price. And that's why we took the decision to reset that dividend to a level that is affordable and resilient across a range of prices that will allow us to lean in and invest right into that transition. And that's what we're trying to do. So it's still, I think, a relatively attractive dividend. Put on top of that, the commitment to do buybacks with 60% at least of surplus free cash. And I think you have a very compelling proposition. And
just give us a thought on the state of the energy market at the moment, as you see it, Bernard. There are those skeptics who will argue that fossil fuels are going to be around a whole lot longer than many anticipate. And in spite of some of the announcements that companies like yours have made and government policy around moving to a carbon neutral future, whilst we have energy prices or the headline price per barrel of oil sub $40 a barrel, what's your thoughts on that?
Yeah, no, I think looking at our presentation yesterday, Jeff, we outlined 6 core beliefs that were key to getting to that strategy. And one of those beliefs is that while oil and gas will be challenged over the coming decades, it will still be a core part of the energy mix. And actually, it will be a core part of BP's portfolio for some time to come. So oil and gas has a future. It will need to be more resilient both in terms of cost structure and resilient in terms of environmental efficiency. And that's what we're very much focused on. The outlook for oil, I think it's probably never been a more challenging time to predict what the outlook will be. It's ever difficult, but with the pandemic, second waves, will there be a vaccine? What's the economic recovery going to look like? I think there is so much uncertainty right now. But what I can tell you is that we did publish our planning prices in June. And we see in the next decade prices around $50. And as we move into the second half of the decade, rising towards $60 for the following decade. So we think this is what we believe is a prudent approach to how we should plan the company. But what the price will be on any day or on any week is anyone's guess.